Alrighty, Forexia family. We are starting today's special is the coronavirus, because who isn't talking about the coronavirus, right? Coronavirus reaction solution, problem reaction solution, and the signature trade strategy. All right. First of all, for everyone that may be new in the academy, or to Forexia, I'd like to explain the signature trade and the basics behind it, the concept behind it, why the signature trade is such a powerful setup, and what it has to do with everything that I'm going to explain in this video. So the signature trade setup is a reversal setup or a reversal pattern that occurs after a trending market. All right. Once a trend has defined itself, once we can say, all right, yep, that is an uptrend, or yes, that is a downtrend, then most likely that is where the signature trade is going to play out. Okay. At the very tip, at the very high or low of that uptrend or downtrend is where the reversal pattern, signature trade pattern, occurs. So here, for example, we have a downtrend, just kind of doodled here, and the downtrend comes to an end. We have the low, and we have what we see here as the signature trade. All right. Signature trade is basically a wedge pattern where price creates its high or low. In this case, it creates the low, and then it creates that defined wedge, where basically the wedge in this case is a problem. Why? Because there is the market starts, instead of creating lower lows and higher lows, it creates really nothing. It starts consolidating into a point, right? There is no defined move here. It's not creating higher highs or lower lows or anything like that, really. So in the retail trader's mind, this is a problem. They're wondering what is going to happen next. And what has the retail trader been taught? The retail trader has been taught to, if you see this pattern, no problem. Just trade the breakout of it, right? I can guarantee you, if you go to Google right now and type in wedge pattern breakout strategy, that's exactly what you're going to find. Everyone has been taught to trade the breakout of this wedge pattern. No matter whether it's to the upside or to the downside, you trade the breakout, right? What we teach is that the breakout is an induction. It's nothing more to induce the retail trader herd into the market and trap them, then reverse the market against them. All right. Now, if you're part of Forexia, you already know this. This is very basics. However, some people are new, and I'd just like to explain that. Now, this move, the signature trade, the wedge breakout reversal pattern, the induction, happens at the very last stage of the trend. Okay, when a trend is just about to reverse, it'll create the lowest low and then that wedge, or vice versa. It'll create that highest high and then it'll start consolidating to create that wedge. At the tip of the wedge is where all the retail traders are waiting to get in. They're waiting for what? That one candle that spikes out of that wedge and closes out of that wedge. And they move, they the retail traders buy or sell in the direction of the breakout 90% of the time. Okay? Why? Because that's what they've been taught. This is the masses. That's what the masses have been taught. Okay? So this happens on almost a daily basis. This happens on a weekly basis. And this happens on micro and in macro. So why is this so important? Because this played out for various different news events that occurred from now, that's occurring right now, and in the beginning of this year. So from the beginning of this year, January, to right now, we've had various different news events where this has played out. Now, who remembers January 3rd, I believe it was. January 3rd, what was going on January 3rd? If we can get someone in the chat to ask January 3rd of this year, 2020, what was happening? Does anyone remember? It's almost like it didn't even happen.
Yeah, they go.
Yes, Raymond. What was that, bro?
No, I said, yeah, you got some comments in. They're saying it.
Yeah. All right, Raymond said it. Attack on the U.S. base. All right, we had the President Trump apparently called an airstrike on the Iranian general, the general of Iran, and killed him. All right, so we're gonna look at U.S. oil here at the beginning of this month. At the beginning of this year, when this was happening, okay, when the Iranian general was killed, the Iran base was attacked. Iran attacks U.S. base, all right? The U.S. oil market of January 2020 was in a strong uptrend for about two months or so, a little over a month. But the very defined uptrend occurred in December. From December to January, an extremely defined uptrend. Okay, what was needed, and here's that signature trade that reversed the uptrend. The uptrend. However, what was needed for the market to reverse itself? A worldwide news event. The Iran general was killed right around January 3rd. A massive spike up occurred in oil, right? This created the body of that signature trade wedge pattern. Now, right after this, a few days after, about 3 or 4 days after, 5 days after, Iran attacks the U.S. base. Okay? Now, my question is this just a coincidence or is this all a setup? Okay? Because how is it that the exact point of this wedge where a breakout is necessary, just coincidentally, Iran attacks the U.S. base exactly after creating this wedge, at the exact point of the breakout, as if it was just a coincidence, right? Okay, how about this? This massive uptrend, right? The Iranian general is killed, and U.S. oil spikes up to the upside. Now, Iran attacks a U.S. base, and the market spikes up again? If it spikes up when an Iran general was killed, why would it spike up when the opposite happens? Does that make sense? So what I'm trying to get at is that this is all BS. This is all pre-planned, you guys. A worldwide news event, because headlines around the world were saying World War III was happening. And I can prove it. World War III, Google Trends, the past 12 months worldwide, right here, between December 29th, 2019 to January 4th, 2020. Everyone was talking about it. Who wasn't talking about Trump trying to create World War III? All of this BS, right? Who's talking about it now? Who's talking about World War III now? Nobody. However, what happened? At that exact pinnacle of the induction, right here, the exact peak, the market said goodbye and did not look back. That was the exact peak, the exact perfect induction of the signature trade. Within 60 days, US oil tanks 3,700 pips.
Whew.
Sheesh. All from this. All right. They needed a problem, a reaction, and this was the solution. What was the problem? Iran general was killed. What was the reaction? Iran attacks the US base. And just coincidentally, once again, what a coincidence that the body of the signature trade took 3 days, just the exact amount of time to create the point of the signature trade where the wedge breakout occurs exactly when Iran attacks the US base. What a coincidence. Now, let's get to the juicy stuff. Let's get to the today's special, the coronavirus, what everyone's talking about. The dollar index we're looking at right now, USD, DXY, dollar index, on the daily time frame. Each candle represents 1 day. All right, we're looking at 2 years, a little over 2 years of uptrend right here. An extremely defined uptrend from the beginning of 2018 to now the end of 2020. What a coincidence that the first case of the supposed coronavirus, right, occurs December 31st. Now, right here, we can see this massive signature trade wedge, right? This is obviously a reversal pattern. This is obviously a pre-created pattern. This pattern plays out to do one thing only. That is to induce the retail herd in the opposite direction. Nothing more. Trapping them, taking their money, and reversing. All right? How many years have people been waiting for the dollar to keep going up, right? Have been just buying just because of this uptrend. All of a sudden, we see this wedge. Now, I'm going to say the same thing that I said on oil. What a coincidence that the signature trade wedge starts creating itself even before coronavirus had even existed, apparently, right? The first case of coronavirus, right around here, and they didn't even know what it was. And China had identified a new virus in Wuhan or wherever it is, December 31st of 2019, right around here. What a coincidence that on the dollar, the breakout of this wedge pattern occurs exactly between when Trump restricts travel from China and the first coronavirus death was reported outside of China. China. What a coincidence. Right at the point of that wedge where it's expected to break up. How many people were induced by this to buy into this? Now, another one. Another coincidence. The Trump administration asked Congress for $1.2 billion in the response to respond for coronavirus. Right at the peak point of the induction, where there's no return, absolutely no return. Another coincidence, the US records its first coronavirus death right after everyone and their mother was induced to buy this. Right 1, 2, 3, 4 days after the United States records its first coronavirus death and the US dollar tanks to hell. The largest candle, take note, for everyone that may not believe in astral trading or that the planetary bodies or the moon has any effect on the markets, the full moon caused a 30% drop on oil, caused the largest candle out of all of these candles, the largest candle was caused during full moon. I believe it was the beginning of this week. All right, what is everyone's thoughts on coronavirus? Let me get some comments on here. Let me see what everybody thinks about this. In my opinion, this was a massive, massive propaganda machine move to get everyone in. Get everyone in and
predetermined.
Exactly. What are your thoughts on this, Mark?
Well, Shakespeare, he said something very profound. He said that the world is a stage and that men and women are merely actors. And the only way the coronavirus is actually spreading from China is through the media. And once again, if we didn't have TV, if we didn't have the news, what happened in China would have stayed in China, right? So when they're spreading the idea, okay, and these ideas that they spread through the media, their intention is to lower the frequency, you see? That's all they're trying to do. And since we're dealing with high-profile elites, pedophile elites, that the energy of these people are completely different from the mass amount of human beings on the planet. Now, when you look at how they manipulate human emotion, they don't really do anything per se. They stage events to get you to react in a certain way. That's just how it's always done. They'll even stage an event intentionally on a full moon, intentionally on retrograde or at certain times of the year to stir up that human emotion. You see, it's like a big melting pot, right?
Hey guys, on February 24th, can I share my screen real quick?
Yeah, brother, go for
Yeah,
it.
man.
Okay. It was actually, let's see here. All right, so it was February 24th. We had the new moon February 23rd, we see, right? Now, the coronavirus, February 24th, Trump administration asks Congress for 1.25 billion for the coronavirus. So the day the market opens, Sunday, Monday, new moon. Now, if we go look over, and this is what Dylan, man, this is what you showed us, bro. Like you can't unsee this stuff. February 24th is when, we got that peak high right around here, the pump and dump, kind of like around this area. And all of our structure, everything we look for played out on that day in concurrent with the moon cycle, in concurrent with the news propaganda for the coronavirus. And this happened across basically if you shorted USD JPY, when this happened, you would be in the money. And we've seen it happen in all the stock markets as well. You look at SPX, I think it is. February 24th, right around here, right where it gapped. So, yeah.
Yeah, right.
Yeah.
And that's all to cause uncertainty in the market, because they know during these events, like Mark and I have said, it's when it's where the word lunatic originates from. When people they would call people lunatics, because of the loon. It's the luna in Spanish is moon.
Right.
So amazing how they can just stage something like this, a world event. Because who really isn't talking about coronavirus right now? Which country isn't? Here in Costa Rica, it's crazy. There's no more hand sanitizers. You can't go to the pharmacy and buy.
Oh my God. No.
There's no more face masks anymore.
Oh.
All the pharmacies
No toilet
are sold out. Everything. There was going to be a Kiss concert here in the stadium, canceled. All the schools are closing. The malls are all closed. It's crazy.
Hey, you know what stock went up though? Lysol.
What the hell?
They
Man,
have
that's crazy, man.
Coronavirus on Lysol packages. Have you seen that?
Boy, people really need to get educated, man. It's crazy how this is why we seem to function like an artificial intelligence almost. The fact that they could tell you how to feel, how to react,
makes our behavior predictable.
Yeah. And that's how you protect your soul, You protect your soul by being able to control the way you react. You see? That's really what it is. That's the end game, Because even when it comes to like having wars, it takes a certain amount of human emotion. You got to stir up human emotion and build up that emotion to the point where you could trigger a war. It takes a lot to make humans go to war, but they keep sticking you with the needle, with this all false propaganda, the false flag events, So it's just I can't believe how my girlfriend, she went to hug this woman. We have a cleaning service. I don't know I think the woman is from South America. She's the mother of a client, and she literally pushed her off. Like, don't touch me, okay? No, honey.
We got people in the chat trying to sell us some hand sanitizer, a 32-pack.
Y'all got me ready to sell some hand sanitizer on the block right now, man. Low.
I was thinking about making a product and say like protect against coronavirus, like don't matter what it is.
Well, just piss in the bottle, man. Piss in the bottle and put some herbs and some oils in it to make it smell good. Because you know urine is a sterilizer, and just sell your own urine. Fuck it, one time. That's unbelievable. I didn't know, because in Bahamas it ain't. You know, I guess the minute they say it's an outbreak in Bahamas too, people go crazy. You know.
And I just want to like underline and theme this, guys. Like, even if you're not into this stuff and you're just here to make money, knowing this knowledge is actually how you make money. It's not just like, oh, conspiracy, hoobly ha, or whatever, you know. So it's all practical knowledge at the same time, and it gives you a whole view of the world, of the economy, and the market, and humans.
Yeah. I don't know, man. If you connected, like if you watching Dylan, right?
Yeah.
You already have to be some watching Dylan on YouTube. I don't know, man. I believe that that's the type of crowd Forexia is going to have, you know, to an extent. Not everybody, but people that really think pretty deep, you know?
Yo, so this happened during the coronavirus. Pretty crazy. USD ZAR, 1,700 pip reversal. And I believe Luke, one of the analysts of Forexia, caught this move right at the very induction, the last induction. Oh, no, I'm sorry. This wasn't it.
It was USD Mexican, you know?
Yeah. We had some amazing moves this week, yo. 2,900 pips in 4 days after a perfect signature trade. So Luke, one of the analysts that we have on the team, he sent out a trade for
Beautiful.
the Academy members. It went, I think it was like 500 pips in profit, hit all of his take profits. In total, moved 2,000, almost 2,900 pips off of the goal.
And that's a perfect setup.
And perfect. I mean, yo, the induction absolutely perfect. And exactly what we're saying, all right? What a coincidence that the news events occurred exactly at the breakout of that wedge, right? Just like, you know, because the breakout of the wedge is the induction. That's the pinnacle. That's the last say goodbye. You know, you're not going back.
Wow.
Perfect signature trade right there. And I mean, you can see it so clearly. Perfect induction right to the low of Tuesday and on Wednesday, right? Midweek reversal. Sunday, Monday, Tuesday, induction trend.
iPod took a trade, brought in the raccoon. And that's the inside joke. All right. Beautiful, brother.
Yeah, let's check out USD ZAR because it was a very similar setup as well. Sunday, Monday, Tuesday, induction trend. We have Tuesday creating that wedge where Wednesday they reverse it off the low right after that induction.
Wow.
1,700 plus pip reversal. Incredible.
That's like textbook. That ain't even a variation. That's like textbook setup there.
Check out this as well. USD MXN on the daily. We have, all right, 1 second.
Gonna have to clean that up.
175 days of downtrend, and in 3 days, it moves, 14 days, it moves a total of 3,000 plus pips.
Wow.
Why? Because how many people were induced by this obvious downtrend?
Right, and holding. And you could see that whole time for those months, it was just in kind of a low, like an oscillation at the same time, because they was building enough liquidity so that they could take it the opposite way, you know?
Exactly.
Wow.
All
This
right.
shit is wild, man.
It is, bro. It's crazy. And yo, this candle right here happened full moon, 1,900 plus pips. Full moon.
Oh, wow.
USD ZAR, I think, yes, that was full moon as well.
That's some next level stuff to catch it right at the low, you know? How much people would actually know to do that?
Yeah, incredible. And I mean, you could have seen the setup happening and looked at the news and said, all right, this is probably going to affect the market in my favor because of all the perfect setups that were happening. Right here, this move, 1,000 plus pips. Wait 1 second. 1,170 pips. One candle. That candle just so happened to be a full moon a few days ago. Alrighty, you guys. I think I have time for one more example I'm going to show you guys.
Hey, Dylan, Elisa asks, you know, I don't know if you see the comment, she said, still don't fully understand that some of these you assume are fake outs and trade the other way, and others you are saying trade same direction. On what basis do you decide? You know, if you
Perfect.
want to
All right.
tell her, like, first you have to see.
First of all, what you need to find is the induction trend. The induction trend is a defined trend to where you can say, all right, I can place this trend line here and this trend line here, and it looks like an obvious trend. Now, stage 2 is identify the low of the wedge pattern after it forms, okay? After we have the downtrend, defined downtrend, defined uptrend, vice versa, then we can find the low and the wedge. Now, if this pattern is to induce with the trend and then reverse against it, then it has to induce to the downside, okay? However, there are different variations of the signature trade which do induce to the upside first and then to the downside and reverses like that. However, first of all, I need you to identify nothing more than the induction trend, the low, and then the signature trade wedge, and the wedge has to break out in the same direction of the trending market. Why? Because that's where retail traders are saying, okay, I'm selling. I'm getting in with the trend. Okay? Why? Because they're taught to trade the trend. Okay? What happens next? Okay? So right when retail traders are getting in, you get in as well, but opposite. So if they're selling, you buy right off of the low. Vice versa. Okay? If it's an uptrend, you sell off the high. Okay? But this is a downtrend, breakout to the low, you buy right at that low. Right here is your buy. And vice versa. If it's an uptrend, you sell off of the high. Hopefully that makes it a little bit easier to understand.
Yeah. If it isn't an obvious trend, you know, it's not a signature trade because you need that to happen prior, you know.
Exactly. And if it's not off of a high or a low, so let's say the market starts doing something like this, and you think there's like a wedge here or something, but it breaks to the downside, and then, all right, there's no...
Dylan, can I add something
Yeah,
to
yeah,
this
go for it, brother.
after you're done? This is actually an add-on to your signature trade in moments when it would actually be a continuation, you know, just to help, you know.
Yeah, you want to share the screen, bro?
Yeah, let me try. I'll try to sketch on paint. You know, I'm not,
Okay.
I don't do trading view, so let me try to do this. All right, so let me pull out screen 2, and we got here. So let's say we have the trend, right?
Right.
Like that. And, you know, we got Zoom Pro on this, Dylan, or no?
Yeah, bro. I think
okay, awesome. And then, you know, the way Dylan draw it, right, is the wedge. Now, here's where you could bring my signature kind of like with Dylan's, right? So you do see a break to the low, right? You see that. Now, what if, let's just say that this break to the low, all right, this is going to be a little messed up. So, you know, I'm just going to try and say that, okay, let's say this is the market here, right? So there are times where, let's say it's Wednesday, and you would think, okay, this is everything Dylan showed me. This is the midweek reversal. This is the break to the low. Now, what can happen is, remember this, liquidity is king. Liquidity is king over patterns at times. So there's times where you will see, you know, that setup, okay, but it would be staged at another obvious zone, okay? So this is where you see me talk about, all right, we have the trend line here. And let's say it goes up a couple of pips. Sometimes it don't even go up a couple of pips, and then you see this, boom, it wasn't a reversal. It's because if you look on a 4-hour or daily, or if it's at an obvious support zone or resistance, this is when it would be a mass amount of people hopping on that reversal with you as well.
Right.
Okay, because they themselves, due to analysis, saw this as a buy zone. And then a lot of times what can happen is they'll go up a bit, hit the stops, and you'll think like, damn, I got stopped out. And it was everything, you know. This is why you have to kind of really be adaptive at times. And then you will see it might create another consolidation or another wedge, break to the low after it already hit the stops of buyers to try to take it at that zone. And then you'll see something like this. This happens. They change it up. So what I'm saying is, even when you see that midweek reversal, be careful if it's out of zone, and especially if you see the US dollar or, the US crosses all at support zones, be careful, because what can happen is a mass amount of liquidity can stop losses could build to the downside. And what this might have been was an induction. And then they break that trend line and get more people on the buying side, you see?
And I would add, think of it from a human standpoint. There are many traders who say, okay, this pair is at an annual low, a monthly low, or whatever, a weekly low. So they will automatically just buy. So when you're showing that induction before it actually broke the low, that's what's catching those traders. So, just always think how with the other traders think at this point.
Right, like that. So let's say you take it to the low and it breaks the trend line and breaks the wedge to the high, and it's New York open, let's say that. Then it would probably be, if you see that obvious support and you see the other crosses at zones, it would probably be good to take that as a continuation, even if it has been dropping for a long time. You see? So just a heads up that this is where you could kind of bring both worlds in. Like what I teach in the academy, what Dylan teach, and you could like tread the waters of different market conditions. You see, because that's what you're trying to learn how to swim in this chaotic energy. And what you're doing is you bring in order. It's you that bring order into the market. Okay, it's chaotic, but it's your back testing, your markups and stuff like that, reverse engineering, and you bring in order. Okay, so I just wanted to put my little thing in there, Dylan. All right.
Beautiful, brother. Beautiful. Love it.
You see, so I think they go together really well,
Yes. All right. I think the last thing on my list that I wanted to mention who remembers the 2008 recession?
Oh yeah.
Fun.
All right. Check this out. Tell me this isn't complete BS. Here is the 2008 recession, right around here. This sell-off. What a coincidence that this entire pattern was made and this was the recession.
They did make a movie about it called The Big Short. Mm-hmm.
The craziest part, I've mapped out presidential elections with this too, and you'll see one leg made at, one election, the second leg made at a different part. So it coordinates around like the whole political campaign.
Right.
I was checking this out actually. This is crazy. So from the top here to the bottom of the recession is, let's say, 890 pips or something like that. This one, which happened in 2 days, is 690. So we almost made up. We're like 200 pips away from doing exactly the exact same move that happened in 2008.
Right.
Crazy. Wow. But yeah, it's I mean, how is this not all set up? All set up, all prefabricated, it's all a stage. And the signature trade wedge pattern The wedge of it proves it. The wedge and the breakout. Because it all has to form, it has to be pre-created. The wedge has to create that instability in the retail trader's mind. They have to see that pattern. They have to see the breakout. It's the induction. Okay, we're buying with the trend. We're buying the breakout. We're buying the breakout of the point of the wedge, whatever the ascending triangle pattern, whatever you want to call it. All right.
Yeah.
They bought into it. Again, this is years back, you guys. How many years ago was this? Right? And it's still happening to this day. So that's just something to keep in mind, you guys. The signature trade pattern is a beautiful pattern, beautiful setup. And especially the fact that you can see something happening before it actually happens. The wedge pattern gives it away before it happens.
Humans are so predictable.
Extremely.
Yeah.
All right. Looks like that was kind of my last goodie I had for you guys. So if you did enjoy the webinar, please let me know. Give it a thumbs up. It's most likely, this video is most likely going to be uploaded to YouTube and the Academy within the next few days. So anyone watching on YouTube, subscribe, give it a thumbs up if you did enjoy. As well, this was part of the Forexia Academy. All of the Academy members saw this video live and were part of this. We're able to participate, ask questions, all of the good stuff. If you do wish to join the Academy, go to backofficeforexia.net, and there you can sign up for $60 a month. Incredible offer we have going right now. So thank you guys for tuning in. Thank you guys for this session once again. And if you did enjoy, we'll see you next week.
Peace out, guys.
Peace out, you guys. Thank you guys. Thank you, everyone.